Hello and welcome to Bangalore International Centre's very own podcast, BIC Talks. Bangalore International Centre is a platform for informed conversations, exchange of ideas, and a space for arts and culture. BIC Talks brings the essence of all that the physical space stands for and more to your doorstep.
Narayan Ramachandran returns to BIC Talks to help us make sense of the Government of India budget from angles that we don't often see in news articles or on TV. Jyotsna Jha also shares her brief comments on the critical social sector in the union budget midway in our discussion. Hi, I'm Pavan Srinath and welcome to BIC Talk. To learn more about our guests and their previous discussions on BIC Talks, visit tiny.cc/BIC Talks 90. Hi Narayan, welcome back to BIC Talks. It's a pleasure to have you on the show again.
Pavan, delighted to be here. Thank you again.
So Narayan, right now everybody is being inundated with an immense amount of news about the budget, right? And the budget almost feels like an odd thing in India, which we've taken for granted that every year when the budget happens, everyone pays attention to what the finance minister is saying. We want to understand what the government is thinking and what it plans to do. But this is unique, right? Otherwise, many government budgets in many countries are more routine things where people look at other avenues for real policy announcements to come out of the government. So do you think the budget situation is a little strange in India?
Oh, absolutely. I mean, we have a Bollywood kind of celebration, if you will, around budget in India. First, in the lead up to the budget, then during the budget. And then, as we saw even this morning, Pavan, the newspapers are having a field day with post-budget analysis. And I was particularly struck by a couple of sort of catchy headlines, such as "Spend It Like Sita Raman" and "The Roaring Twenties." So everybody's having a bit of a ball, if you will, which is rather unusual in any context, leave alone in an emerging market context. So this is unique to India.
So then, Narayan, tell me, how do we make our episode interesting and relevant to our listeners, given that everybody is inundated with news about the budget? What are we missing in this breakneck coverage and opinion and analysis on what the budget contains?
In my opinion, what happens is people go straight for the detail, right? If I were to use a metaphor for you, it is like describing the human body, but they start with, either the organs or the DNA of the individual and sort of oscillate back and forth between those. And really, there is not much communication about the morphology of the person and how it all comes together and the holistic sort of package of the budget. I mean, if you were to ask, a substantial percentage of the people listening to the budget yesterday, what do you think the total size of the Indian budget is? I don't think very many people would really even have a clue. So I would propose that we unpack the budget in a very different way from everything that has been spoken about in the short 48 hours since, or not even 48, in the short 36 to 40 hours since the budget, but sort of lay bare just that which is important to listen to and to absorb from it. That would be my contribution, I think, to the way we should look at this, Pavan.
Then walk us through what this budget speech was like, and our budget speeches are so funny. You look at chief minister's speeches, be it Karnataka or any state, they will contain items of ranging from 10 lakhs to 25 lakhs, right? Which is like a rounding error on the size of a state budget. And often when we hear the finance minister's speech, that also contains 100 crore, 200 crore elements for various things, which are again rounding errors on the full size of the budget. So how do we go beyond the long budget speech, which I think was still shorter than last year's? And how do we understand the storytelling behind it? And then we'll get to the details, the ideology and other things that the government is trying to project.
Let me just add to what you just said about that, Pavan, which is not only is there a fog related to the amount of money, as you say, we can range from the tens and mere hundreds of crores all the way to several lakh crores, which, once again, I don't even know how many people know exactly the number of zero in a lakh crores, which is the same as a trillion rupees. We sort of interchangeably go from one to the other. That's one. Second, there is an extreme fog on the time frame. So if you heard the speech yesterday, there were time frames that were 3 years, there were time frames that were 5 years, there are time frames that is 1 year, and so on. So very difficult to parse exactly how much in this year. We don't know whether that particular program was front-ended or back-ended. So it's virtually impossible to identify the annual spend, if you will, that arises, even if you were able to glean the entire number. So there's a time fog, if you will, right? So there's a money fog, there's a time fog. And even more importantly, there is what I call a name fog. So we turned some programs on its head. The finance minister this time spoke about 6 pillars. Those 6 pillars are not necessarily the pillars that were used last year or in any prior year. So then we have to retrofit all those other pillars that we had into this and so on. So we have name fog, time fog, and money fog. So it's tough to parse it. So what most of us who sort of study this have to do is wait till all the documents come out. And on this note, I really do have to compliment what was done. And this is, Pavan, you and I have been discussing this as storytelling. The storytelling and the data visualization related to the Indian budget is, I would say, in the top decile of all countries today. By which I mean, I don't know how many of our listeners have downloaded the app that you can download all the budget documents from. It's rather impressive in its quality, in its simplicity, and how that much data can be pushed out to literally to anyone who wants it. So I would say absolutely top marks for data visualization, for storytelling, and to some extent, I would say for articulation and communications as well. So even though there might be some confusion related to numbers, etc., talking about things in categories, 6 pillars from yesterday's conversation, makes it relatable, if not fully comprehensible, at least relatable to the average listener. So I would say full marks for the storytelling and the rhetoric aspect of this budget. Well done on data visualization. And now the pure analysts among us have a quibble that everything has gone to PDF, so you can't really take the data and deal with it. So I hope the government corrects that, so they have to present it in a data downloadable form as well. That's a small quibble for what would otherwise, I would at least rate as a very good storytelling exercise. And we're getting better at it. And I think that's reflective of a maturing democracy, number one, but number two, about a democracy that cares to present properly to the citizen.
And at the same time, this particular budget has also seen a bit of a shift in the transparency with which we are seeing some of the numbers, right? While these fogs exist in the speech and in parsing the speech, what is welcome is that I remember discussing this with you last year, that there was so much fog, there was so many things that were, say, not above the budget line that get reflected in the fiscal deficit and so on. A lot of that, perhaps using the pandemic as a good reason, have been brought onto the budget books. So, for example, I think the Food Corporation of India used to borrow from the National Small Savings Fund. Now those liabilities and so on are brought onto the government budget books. So there's more transparency, right? So the fiscal deficit looks scary now, 9.5% of GDP. I'm happy to see that at least the spade is a spade now. We can perhaps trust some of these deficit numbers a little better.
I think that's an extremely welcome development, Pavan. And as you correctly point out, from last year, we spent a good percent of our conversation, and including at the panels that we were on at the Bangalore International Center, speaking about not only the fog, which is now common to many Indian budgets over the last several years, but even more the obfuscation and sort of the fake news aspect of the data that we had going back a few years, ending last year. So it is extremely welcome development that the technical term for it is contingent liabilities and other things that were off balance sheet have come on balance sheet. That's number one. But number two, rather than go out of your way to sort of figure out how something has to fit a preconceived straitjacket, you've just laid it out and said, here it is. And the result is, a doubling of revenue deficit and a dramatic increase in the overall fiscal deficit to 9.5% and so on. I just hope that this spirit of transparency that has been permitted by a once in 100-year pandemic, spirit of transparency will survive the vaccine. So we want to kill the virus with the vaccine, but we don't want to kill the transparency with the vaccine too. I just hope that's the case, but it's certainly a good development in this budget. I think one can trust the deltas, that is the revenue minus expenditure numbers, a lot more, and they appear almost humblingly believable and reasonable. There are a couple of exceptions to that, but that is not in the nature of fake news. That is in the nature of confidence in implementation that may or may not be misplaced. We can talk about that in just a short while, but I don't think there has been any attempt at data obfuscation this time.
And here I want to get a sense from you. I mean, this is an unprecedented year. We've seen a contraction in the Indian economy since before I was born at the very minimum. And can we put the overall budget into some sort of ideological frame to get a sense of the reaction to the crisis that's happening? One way I'm looking at this crisis is that if we just look at the top line GDP, we've been pushed back by 2 years, right? I mean, we'll need 2 years to get back to where we were before the pandemic. If you look at various numbers like percentage of people who were working in salaried roles, we've been pushed back to where we were in 2011-12. On many other indices, India has been pushed back by at least 5 to 10 years. So given that kind of a push, while we are trying to develop rapidly, lift millions out of poverty, bring about some sort of balance to the kind of structural inequalities that might exist, how would you see this budget?
Big question, Pavan. Let me break it up into a few parts. I think there has been an ideology shift, and that ideology shift is best exemplified by the fact that the fiscal straitjacket that the NDA, both 2.0 and 3.0, had sort of set for itself. They were very reluctant to let the fiscal deficit go beyond a point. It was sort of leaking, and the leaks were what we were discussing, in the last several budgets. Is it 4.1? Is it really 4.6? And that kind of thing. But beyond that, there was sort of this DNA that said, let's try to keep the fiscal within a certain range at the federal level. That fiscal straitjacket was actually first proposed under the FRBM Act in 2003. The discussion of it took place entirely under what I would call NDA 1.0, which was Prime Minister Vajpayee's NDA government. So the NDA ideology in India has certainly been one of relative fiscal prudence, and they have maintained that through ordinarily good and ordinarily difficult times. Of course, the pandemic is not an ordinary event, and it's just a magnificently outsized event in its impact. Not only its overall impact, which as all of us know, has created a contraction of a size that we have never seen in independent Indian history, in first time in 30 years after the liberalizations of 91, 92. So it is truly, the word unprecedented is probably a very small word to use, but it truly is unprecedented for independent India to have been struck by an event of the type of the pandemic and its economic consequences. So that has allowed and necessitated both a change, as Keynes famously said, when the facts change, I change. What do you do, man? So in a very similar way, I think this government has said, okay, enough. This event requires us to let loose a little bit. And in that sense, this budget is heavily Keynesian and not sort of the modern compact that was first born 20 years ago, which was far more fiscally conservative. It's a little bit of a trend going on everywhere in the world too. So it certainly supports the same idea, but I would say that's the most important one. On the flip side, Pavan, and I think this is equally important to mention, there was some worry that this would be protectionist and extremely socialist. Luckily, that did not happen, and the need to tinker on too many things did not happen. But equally unfortunate, it didn't really talk too much about the private sector. So I would think of this as continuing sort of borderline statist, which is exactly the way the Congress UPA was. But in the context of fiscal prudence, they have let it go a little bit, which is a moderate ideological shift for the NDA.
So then do you think the reduction in fiscal prudence, or sort of saying that, yes, let's spend more, is the nature of what is happening now very different from the nature of the fiscal stimulus that happened post the 2008 financial crisis under the UPA regime?
The fiscal spending that happened in 2008, 2009, and Chidambaram was finance minister then, was totally accidental. It was actually a pay commission that was not a response to the crisis at all. So India, first of all, was less directly impacted by that crisis. And second, Indian response was accidental as opposed to conscious and specific. Of course, there were some liquidity measures that were not accidental, that were taken by the RBI. But in terms of the government, there was not much, one, need, and two, actual follow through on a fiscal spending package, if you will, at that time. It happened because of the pay commission and some farm loan waivers that took place in 2008, 2009.
Let's dive into the numbers then a little bit. So if we were to follow the finance minister's speech as the style for delivering the budget, it would look very, very different from how, say, any corporate might present their budget to their own internal stakeholders or to their shareholders, right? So if we were to look at this from the top down as an exercise, how would we look at the details?
Yeah, I mean, my challenge, as I told you, Pavan, is just ask any random person what do you think the total size of the budget often was, and you'd get a total stare. So let me begin there. That we are at a moment in time when the total size of the Indian budget is about 35 lakh crores, which translates to, which can be stated as 35 trillion rupees, if you like. Now, that's where I would start, because the next statement is that this is almost the same as it was last year, plus minus about 1% or so. So in a strange way, 21-22 and 2021, immediately prior year, the prior year necessitated certain spending, particularly on healthcare and so on. And that has simply been held, if you will. So if I were to rephrase this morning's Economic Times, which said, spend it like Sitaraman, I would just say that the actual phrase that you would use to describe this budget is keep it spent like Sitaraman, because there is no change in the overall size of the budget since last year.
Even though the economy has shrunk a little, right? So in that terms, the budget is a little bigger. But if you account for inflation, then it's a little smaller. That makes it slightly dicey, right?
Yeah, that's true. In that sense, the expenditure is certainly a little bit bigger as a percentage of GDP than otherwise. You're absolutely right. But these things you need to think about it sort of on a multi-year average rather than at a moment in time. And particularly because the so-called V-shaped recovery is more a law of arithmetic rather than anything that the government is doing. And you will get a positive reaction to the negative reaction. And so at a certain point in time, the V will look like it's bridged the entire gulf that it went through, right? So I do think, I mean, there are elements and of the economy that won't do well. There will be segments of the population that won't do well. That's what everybody refers to as a K-shaped recovery. But otherwise, I would think that the budget is more or less the same, and there's no great difference between last year and this year.
And what about then the overall nature of the spend? Say, we start usually by looking at capital and revenue expenditure, right? This time it looks a little different.
Yeah, I think this one is really a positive, and I don't know that it has come up for as much discussion and highlight as it should. And that is that the internal shift on the spending is moving from consumption spending to capital expenditure. Think of it as this way, right? Let's just think of a household. And in a household, if you decide to spend a little less on eating out or that one extra pay-per-view movie, and instead you spent it on a sewing machine or something else that would be a productive asset, that's exactly what we started a couple of years ago, was really quite big last year, and that trend continues this year to the tune of a number like 5.5 lakh crores. So I think it's a positive one statement to make, that the internal composition needs to shift towards investment rather than spending, and then to back that up with actual spending, which from last year's RE, which is the revised estimate, which is the best thing we have to understanding how much was actually spent at this moment before it becomes actual in a few months from now. That has been a good story for India, which is we've actually made that shift, and by and large, that shift has been utilized for the purpose it was intended for, and therefore productive assets have been built. And so I would draw attention to that as a continuing but very, very useful element of this budget, the shift from revenue spending to capital expenditure.
But otherwise, what do you see sectorally? I mean, there have been big announcements on health and rural development and so on, but when we actually look at the numbers, they're not terribly different from before, right?
Yeah, and interestingly, one of those nice data visualization charts on the app actually show this, that while the rhetoric on health is extremely helpful, some of the plans that the finance minister announced are very helpful for health. Health percentage spending is actually going to go down from last year as a percentage of GDP than it was in the immediately prior year. So, I mean, for all that rhetoric, the money is, as a percentage of GDP, the stagnant or slightly lower for health. So overall, I would say there is modest increase in the money to health, rural development, and financial sectors, but the outlays truly are unremarkable.
Thank you, Narayan. I'm going to cut here briefly to Dr. Jyotsna Jha for her more detailed views on the 2021 Union Budget and how it looks at the social sector from health to nutrition to education. Dr. Jha heads the Center for Budget and Policy Studies in Bangalore.
The turmoil that the pandemic has caused to, issues of education, health, livelihood, food security, which is very different from health, and also nutrition levels. I will start with food and nutrition because NFHS data that has been released partially recently showed that already even before pandemic, in 2019, certain states have actually shown a decline in terms of nutritional status. Now that is alarming because that would have gone worse. We still don't know how much worse, but we know that it has gone down. Like it has been reported that almost 55% of children who should have been immunized during this year have not been immunized. Now that these are very, very difficult challenges, and one would expect that the budget would address it at least partially, if not fully. And that, I think, is not in sight. Let's look at actually, Women and Child Development Department, which actually spends quite a bit on children's nutrition as well as early childhood education, as well as women, and nutrition, women and children nutrition is linked because low birth weight and other aspects of child health depends on the mother's health. And there we actually see a decline. We see a 20% decline when it comes to Women and Child Development Department, the Ministry of Women and Child Development. It has declined by 20%. Now that is severe. And this decline I'm talking about as compared to the last year's budget estimates. Revised estimate is lower for many of these because of the disruption caused by COVID. So the Anganwadi centers remained closed, and obviously the expenditure levels have been lower. But that cannot be the base for estimating for future. In fact, the base for estimating the future would be the need, which would be much more than what it was last year. So starting there, if you go to food security, food security in general, because that is where they are claiming that it has gone up by, almost 4 times. Now that is misleading. The higher allocation is not a real higher allocation. It's basically Food Corporation of India's debt that the government has decided to pay, and in previous years they were asked to go for debt, and this year it's the budgetary support is being used, and therefore it's not the real hike. If you really actually, it's meager. If you take inflation, it will perhaps even equal out. Now that means that the assumption is that distress is over. Now that is not true. That is not true, because we are seeing, all our surveys have pointed out to job losses, to income losses, and to livelihood crisis. It's not only about job, but real livelihood crisis. In our recent visits to parts of Bihar, we have seen children engaged in all kinds of jobs, including, bootlegging. So it doesn't reflect the reality. The crisis is not yet over, not for, half the population. So we don't see that. Now, if we move away from food crisis to nutrition to health, because health is, if you're talking of nutrition, you go to health. Now, again, that is being projected as a big thing, that more than 100% jump. So first point about this being misleading. One, the definition has been changed. So it doesn't include only the Department of Health's expenditure, but also water and sanitation. And as a broader concept, it's not a bad idea. It's a good idea to look at clean water and sanitation as important tools for ensuring good health. But that doesn't mean that you mislead by saying that it's the health budget, especially if your budgetary practices have been different in the past. So there lies the problem with the arithmetic. So if you actually correct it by the fact that if you remove water and sanitation from there, and if you remove one-time COVID vaccination there, then the increase is actually meager. It's less than 10% from last year's budget. And one more issue there. See, the new scheme, this Atmanirbhar Swasth Bharat Yojana, has a little more than 64,000 crore. But that's for 6 years. And figure for this year is actually not available, so far as I have tried to look at it. So how can you include that as an annual increase? So these are, questions that need to be answered. And also, the budget is a tool. It's a policy. It's also a tool of accountability. It's an annual financial statement. So if you have misleading directions in the budget speech, in the calculations, it's not a right message when it goes to the government being accountable to public. So coming back to health, one doesn't know where the money will come from for doubling the efforts for missed immunization, for doubling the efforts for bringing back the institutional delivery on track, which again had slipped down badly. And these are not the issues of, that you just go and fix it. These are issues of social behavior. Once you have missed it, you have to have renewed efforts to mobilize people to go back to those practices which you had actually achieved after a prolonged process of efforts of mobilization of various interventions. So that's really big issue. When it comes to education, again, education has actually reduced. I was looking at economic survey 2 days ago, and for one national, like Rajya Sabha channel, they had a panel discussion, and I was part there. And this is the point I raised, that if you are advocating for a massive increase in health budget, you also have to think of where it will come from. And if it comes at cost of other social sectors, such as education, such as women and children, then there is a problem. And that's what seems to have happened. So despite the fact that maybe increase in health budget is not real, although there are elements which are real and that is welcome, Where is it coming from? It's partly coming from reduction in education budget and reduction in allocations for women and children. If you look at schemes, so Samagra Shiksha, which is the major scheme and the main vehicle actually for funding, development funding of school education, because the maintenance funding, which is the massive like salaries and all, is borne by states anyway. So the allocation for Samagra Shiksha has been reduced by almost 20%, more than 19%. So this is completely, it negates the disruption in school education that has taken place. In fact, I was hoping to see a program which will talk about social mobilization for bringing children back to school, for immunization, for women's participation in work, women's institutional birth. So I actually was hoping that something like that we would see. That is completely absent.
Thank you so much for sharing your thoughts with us, Jyotsna. I'm now going to cut back to the conversation with Narayan Ramachandran, and we also explored the government revenue or income side of the budget, apart from other things.
There is no real increase in the tax collection as a percentage of GDP, so we remain sort of on the same trajectory as we were, unfortunately a little lower than 2017, which was coincident with a very good economy. Almost the entire shortfall in keeping that expenditure the same is made by borrowing more and by expecting to sell, 1.75 lakh crore of government assets. And this latter 1.75 lakh crore of government assets for sale, that's the one that I think many of us are very skeptical about, because the track record on that is rather poor, number one. Number two, as all of us know, Air India sale has been discussed on again and off again for 20 years and so on. So, and even bank privatization, while the finance minister said 2 new banks for sale beyond IDBI, fact remains we didn't do IDBI, which could have been done at any point in the last 3 or 4 years. So I think the maximum skepticism will come on this 1.75 lakh crores. And if you need to hedge whatever you don't raise there, then you will have to borrow more. That's one sort of gap in the budget. And another one will be that the healthcare spend on vaccine is slated to be 35,000 crores. 35,000 crores, if you do the arithmetic again, is not good enough to vaccinate even 250 million people. So if you need to vaccinate 500 million people or more, you will need more government spending. So on both those counts, I expect that the borrowing, which has gone up by quite a lot, 80% from 2019-20, that is not last year, but the year prior to that, will have to go up even more to make up any shortfall on these two counts.
So Narayan, even on the vaccine count, right? This is the outlay by the union government. When we look at health, for example, we know that overall in the country, if 100 rupees are spent on health by the government, of that only about 35 rupees come from the union government, rest come from our states. So maybe there's always been that extra emphasis on state spending, and these are also state subjects, right? So whatever the union is trying to spend on these topics like education, health, nutrition, and so on, go over and above, honestly, their constitutional mandate. So do you see that changing in any way this year, where the states have been squeezed for resources, the transfers available to states have also been lower? Do you see anything very different right now?
Yeah, this is a minefield of a question, Pavan, because as you know, the states have been griping that they haven't received their share of even GST, but all of the devolution that was promised under the previous finance commission and the first year of this new finance commission. So that's number one. Number two, constitutionally, I would slightly make an amendment to what you said. In India, the way the federal constitution is, the constitution is written, is anything that is not already covered in the constitution, the residual power lies with the center. In the United States, for instance, it's exactly the opposite way. So the Indian Federation itself is somewhat of a unique federation because the taxes are collected by the center by and large, except for things like excise. And by the way, I'll make a separate point on excise and cesses that are being collected in this as a consequence of this budget. But the federal government reserves that power and then devolves that money through the Finance Commission mechanism to the states. So it's a lot more complex than it's just sort of the center is doing more than it is expected to do. State's comment will be, yeah, it's doing more than you think it's expected to do because they're giving us way less than we expect them to give us. So it's a complicated question. Yeah. So it's difficult to think through that fully. But also, I think this is an unprecedented thing, the vaccination at such a large national scale. I mean, even many developed countries are giving a vaccination completely free to their citizenry. Thinking about that at a different time without insurance coverage and things like that would have been impossible in the UK and the United States and other places, whereas now they're doing that. So the vaccine for COVID-19 is a unique animal that I think we have to treat as that. And in that context, 35,000 crores is not enough. But you're right, if the state can spend.
Or maybe if the states get asked to spend, we don't know yet. On the same note, we are now having a fiscal deficit, again, that we had not touched for a long time. Do you think that in the coming months, as state governments start releasing their budgets, we might start seeing the first revenue deficits in state budgets that we have not seen since the FRBM came in? Do you think that's a real possibility?
Sure, yeah. I think that's open season, which is part of the reason why they held the line on the FRBM at the center, even though the numbers were still not quite there on the 3.5%, but at least they held the line. Now it's a little bit of open season. Everybody's going to blame it on the pandemic, and they would largely be correct, but also it's going to excuse some sins. You're going to get unreal revenue deficits and budget deficits out of the state. So I wouldn't be surprised if the combined state and federal deficit numbers are closer to 15%, 14 to 15%, which is among the lowest it has been in a long, long while.
Wow. Narayan, also coming back to the government revenue side, we already talked about divestment and the challenges there. One of the things is that our finance minister talked about how there will be no new taxes, right? So is this a good thing? I mean, is taxing our way out of a pandemic the right way, or is it about having more money in the system and in private hands? I'm very confused on how I should be reading this.
Yeah, well, the market is not confused. The market responded, I think, on really only two things. One, there was no additional tax or cess, which was feared on particularly high income earners, for instance, or a change in corporate tax again, which would have been, antithetical to the moves that they've already made and so on. So the fact she did nothing and left it there has actually been a big positive, number one. Number two, the second, which is that she allowed the deficit to run up and the gap to be filled, or to stay up and the gap to be filled, which is this year's fiscal deficit of 6.8%. Is the delta is filled by borrowing again. And so those are the two items on which the market has responded. So I would say to you, not changing taxes every year is a sign of a mature economy. And I don't think, changing it a little bit here and a little bit there does more harm than good. And even the perceived good of actually raising resources doesn't really work until the number is very high, particularly given India's abysmal tax base. And that is some long-term problem that we need to correct, which for some reason we are failing miserably at. And not only this government, every government that we've known in the last 15, 20 years has failed miserably. But that's what I would correct rather than fix the tax rate itself.
Thanks, Anand. So one perhaps final point, given that it's linked to previous podcast discussions we've had on BIC Talks over the last year, right? How do you see some of the announcements around the, if you will, the software of Indian finance that are there in the budget. There's talk of a development finance institution. There's talk of creating a bad bank to absorb certain NPAs. How do you look at the financial sector and what the budget has said in terms of necessary reforms to the banking and the finance space?
There's a smattering of good things. There's a smattering of very old ideas. A development finance institution is an old idea from almost a Nehruvian era. So it's a very mixed bag, and it completely lacks cogency. So I would say the financial sector reforms are unimaginative. While all of us have been asking for a bad bank simply because that's the way to deal with the balance sheet crisis, but it needs to be born along with governance reform, which has not been tackled for banks in this context, and also a meaningful recapitalization. 20,000 crores, I don't know what you would call something smaller than a drop in a bucket, but it's a nano drop in the bucket of what we need. So I would say to you, we needed comprehensive, and we've spoken about this, Pavan, in other podcasts. You need, for the financial sector, particularly a balance sheet sector like banks, you need a shock and awe system. And the shock and awe was not there. So while the bad bank is a good idea, it needs to be born with other things as well. And it's likely to fail if it's just born by itself, which is what this one is. So I'd say mix, not so good. The insurance thing is good. Overall, I think that will spur FDI, which will keep the rupee well bid. And obviously, keeping the rupee well bid is a positive as we start growing. I mean, currently, we have been accumulating dollars at a furious rate, so much so that the FX reserves are now well north of 550 billion. But a time will come when we start growing again at a reasonable rate and exports start picking up. At that point, the rupee will be under pressure because the relative inflationary currency will be the rupee relative to hard currencies like the dollar and the euro. And at that time, we will need to, quote, defend the rupee against anything further. And therefore, I think that's a good thing to bring in FDI through the insurance route, in addition to the fact that it's a very capital intensive sector, and we might as well utilize capital that seeks to come to this country.
Thank you so much, Narayan. In closing, what would you expect beyond this budget in terms of, I'm sure we can drop large wish lists, right? But do you see that there is a need for more signaling beyond this budget? Perhaps we are also paying attention, and the government is making moves that may not necessarily require big spends, but might require policy changes. So do you anticipate or expect an agenda over the coming months?
Pavan, to sort of return where we started, I would put signaling in the storytelling bucket, and they're getting very good at it. So I don't think we need more signaling. I think we need more delivery. So we need more delivery on 1.75 lakh crores of sale. We need more delivery on the 3 lakh crore of DISCOM reform actually resulting in DISCOM reform. We need both more imagination and more delivery on fixing the banking crisis in this country. So I think we're sort of at end on the rhetoric, and we need to start fixing the one thing that is not discussed or presented in any budget, which is the implementation deficit. And I think it's time to fix that. And that's in our control. It doesn't require anybody else. And we should really work hard on plugging the implementation deficit so that these other deficits don't increase.
That's a good note to end on, Narayan. Thank you so much. Hoping that we'll actually see some delivery and some implementation on all these lines in this coming year. That's the hope every year. But I think the necessity of it this year is perhaps higher than ever before. Thank you so much for joining us again on BIC Talks.
Thank you, Pavan. Pleasure.
Thank you for listening in till the end. Please share this episode with a friend on social media, WhatsApp, or anywhere else. It would mean the world to us. And in case you're listening via iTunes or Apple Podcasts, please leave us a rating and a review. Subscribe to BIC Talks on email or your favorite podcast app, and don't miss out on future episodes. This episode of BIC Talks has Gaurav Krishna as our sound engineer. with support from S. Sarvanaraj and Lekha Naidu. And the accompanying episode artwork was made by Chandni Venkataraman.
Thank you for listening to this episode of BIC Talks. This podcast can be accessed on our website, bangaloreinternationalcentre.org, as well as on any of your favorite podcast platforms. Tune in for new episodes every week, and do subscribe to our YouTube channel and follow our Facebook, Twitter, and Instagram pages to stay informed on our latest updates.